half an hour to go for trade to close. Let's touch base with Sunil Subramaniam, MD and CEO, Sundaram Mutual Fund. Sunil, it's good to have you on the show. How are you looking at the markets at this juncture? What is the kind of opinion or investment philosophy that you're following?
I think at this point, on the short term, we are playing safety. And to a certain extent of a long-term portfolios, we are clearly accumulating cap good companies and infra-related companies, because we believe that current valuations represent a very attractive time to pick them up. So from our perspective, the next few months are going to continue to be volatile, because we see a lot of news flows the market is expecting, starting from the GDP footprint this week to the whether the FTA Fed rates hikes rates in December, to what is their commentary next year, given that there's a slight slowdown in the US growth rate, the December elections, the February budget, and the October, November, December quarterly earnings. So there's enough inflow of news to keep the markets on a very tenterhooks. And so we believe in the short term, in the next 6 to 12 months, it's wise to play safer positions. So that's the call we are taking.
So take coming in. We will touch base with you in just a bit more to talk a little bit about your approach to the markets in terms of individual sectors and stocks. But for now, let's shift focus to Deal Street. ET now learns that there's a mega transaction that's brewing in the domestic IT segment, with promoters of a key mid-cap player being in exit mode. My colleague Ashwin Mohan joins in with the exclusive details. Ashwin, fill us in. Which is the company that you're talking about, and any idea on the valuations?
Thanks for that, Avan. So this is a mega deal that is brewing in the domestic IT segment. We are given to understand from our sources that the promoters of NIT Technologies, which is of course an IT solutions provider with presence in key verticals like banking, finance, insurance, travel and transport. We're given to understand that the promoters of NIT Technologies are currently evaluating options to in fact sell their stake in the company. Sources are telling us that the promoters of NIT Technologies are keen to exit the company at a significant premium to the current market price. Now, the promoters of NIT Technologies hold about 30% stake in the company, out of which 23% stake is held by NIT Limited. So those are the two stocks that one needs to watch out for, NIT Technologies and NIT Limited. And of course, a major part of the company is also held by FPIs or foreign portfolio investors as well as mutual funds. Now, the rationale behind this, sources are telling me that as of now, the valuations are very rich. There is a professional management in place, and therefore, this seems to be a good time for the promoters to evaluate an exit option. In fact, because of the nature of the transaction and because of the presence of NIT Technologies in banking, finance, insurance, travel and transportation, I'm given to understand from sources that this potential transaction wherein the promoters are evaluating a sale of their stake in the company could attract significant interest from several players, including strategic players as well as private equity funds. Now, in terms of official responses, we have in fact reached out to NIT Technologies for an official comment, and they have responded saying we do not have any comment to offer on ET Now's query. In fact, there is also an investment bank that I'm given to understand from sources has been mandated for this proposed transaction, and that's investment bank Credit Suisse. Now, we've reached out to Credit Suisse. We are yet to hear from them, but this is the big deal that seems to be brewing in the domestic mid-cap space. The promoters of NIT Technologies are evaluating options to sell their 30% stake in the company and are looking at a significant premium. So keep an eye out on this brewing deal in the days to come.
All right, that is certainly an interesting deal. Thanks very much for giving us the exclusive details. The promoters are exploring the option to sell stake. Could happen at a significant premium, and we understand that there's some strategic suitors as well as PE players that may express interest in the same. In fact, Sunil, let's get right back to some reactions from you, not specifically on NIT Tech in this deal, but feel free to comment if you have any views, because we understand that the promoters are in exit mode, or in general as to how you're looking at the mid-cap IT space.
I think that between mid-cap IT space and large cap, we do tend to prefer the large cap at this point of time because of the fact that mid-cap IT valuations have risen up very sharply over the last year and a half on the back of the rupee depreciation, the fact that they are more nimble, will be able to latch on to the newer cloud computing, Internet of Things, and those kind of actions, right? But at the larger IT space, we see that the whole digitalization and the move is equally good, and we are much more comfortable at this point from a valuation perspective at the larger cap. And so I think mid cap, I think the key point is that the valuations ran up a lot. Now that the rupee is starting to appreciate a bit, right? Some of those valuations might come off a bit in the shorter term. So probably the deals that you are talking about are driven by the fact that, valuations are today good for existing promoters to dilute stakes. But that apart, I think from a fortunes perspective, bets are on the larger IT as opposed to this purely from a valuation and future growth perspective.
I believe there's an NFO from the House of Sundaram Equity Savings Fund. It's an open-ended scheme investing in equity, arbitrage and debt. What is the rationale? What is the portfolio strategy? Highlight that for our viewers.
Yes, so basically this is a product which is meant for first-time investors and investors with a more conservative risk-reward approach in the markets. So what this product does is that it, with an equity taxation, it provides investors a more blended asset class of aggressive equity about 25 to 40%, the arbitrage, which is a hedging against the aggressivity of another 25-30%, and fixed income, the debt market, another 25 to 30%. We believe from a timing perspective, given all the newsprint and news flows over the next 1 year, arbitrage, which traditionally tends to give a higher return when the market volatility is high, should be performing at close to its peak kind of returns for the next 1 year. At the same time, thanks to the ILFS crisis and the certain liquidity issues on the NBFC space, overall debt markets today, the yields have gone up as a spread over AAA. Today, AAA general yields are at about 8.7, 8.8, AA are about 9.15. So given this perspective, we believe that it's a sweet spot for this fund, that an investor will get decent returns from equity and a wholesome experience of the stock market. As you know, mutual fund penetration for all of its rapid growth is still in the high single digits in the country, and there is enormous scope for this to grow. And I think it's important that we handhold investors who are coming in the industry and give them a rich and rewarding experience, which this fund, is geared to do. So it's a safer option. There used to be a product which was very popular many years ago called MIPs, which was 65% debt, 35% equities, catering to the more safer investors. This is actually an equity-oriented MIP because 65% of the portfolio will be in equities through arbitrage and equity, but at the same time, only 35% will be taking equity risk. The rest of it will be in largely, stable return products like arbitrages and fixed income. So it's an ideal product for the time, and I think that's the reason we're choosing to launch this as an open-ended fund at this point in time. The new fund offer closes on the 30th of this month. It's the end of this week.
All right. Thanks very much for that. We'll come right back to you with respect to the newest fund in the House of Sundaram Equity Savings Fund. But yes, bank, it's a choppy stock for sure in trade today. In fact, very volatile as investors are debating the fate.
Dr. C.K. Narayan is with us. Kunal Vosra and Manoj Jaiswal is there as well. Dr. Narayan, before close, what is it that you'd recommend?
Well, I would look at Hero Motor. The stock has moved some since I sent in a recommendation, but I still feel at the price between 3,050, 3,080, the stock continues to remain a buy. So with about a 30-point stop, one could still be a buyer at the current levels and add some more on dips. So I think a price likelihood which should be higher, I think would certainly be on the cards here. ITC is the other stock that I like. It's trading now at about 285.86. I think ITC can be bought with a stop at about 280 and can expect a price zone of about 292 by tomorrow.
All right. What about you, Kunal? What's on the radar?
So there are two stocks which I am highlighting. One of them is ITC. As I think, as CK said, it's an inverse head and shoulder pattern. The breakout has already happened for ITC today, and the stock is holding its 200 DMA. So that's a buy. Targets of 294, stop loss 278. And the other stock is a buy on Godrej Consumer Properties. I think consumer products. I think the stock is also showing strong signs of revival. On the hourly charts, there are some breakouts which have happened in terms of indicators, and the entire pack moving on the positive side. I believe even Godrej CP should try and catch up with the big underperformance. So that's a buy. Targets of 766 and stop loss at 727.
All right, Manas, let's get in your recommendations as well. What's the trading picks?
I like Hero Motocorp because stock has given a fresh breakout above 3000 mark, and we saw a huge volume. Stock is making higher tops and higher bottoms. Stock is trading above 100-day moving average. So I just want to revise my targets now. Target would be around 3300 in Hero Motocorp, and stop loss should be 3000. Secondly, the buy on Apollo Hospitals, where stock has been making higher tops and higher bottoms from the level of around 1050, and we saw some correction few days back, but the stock has taken support near 20-day moving average, and we saw a lot of buying interest today in the morning session in Apollo Hospital. So I believe that this time it can again test its recent highs. Target would be around 1290. The stop loss should be 1225.
All right, there you have it. All of the top trading strategies. Just keep an eye out on the corporate banks and FMCG. That's fueling the move. We've recovered quite comfortably from the low point of the trading day, with even the broader end of the market trying to erase some of the earlier losses. 10,631 is we're just 20 points shy of 10,650. But remember, in tandem with the global setup, or rather the macro setup, the market certainly isn't obliging. 385 points up on the Sensex. Good time then to get in Vivek to find out. In fact, let's keep it with our technical guests. And Dr. Narayan, how are you looking at some of these tire stocks in trade? We're talking about the Equitas report, a positive effect from a sharp decline in some of the key components that are used here. JK Tyre, Apollo, Balkrishna, how are you looking at some of these names, Dr. Narayan?
Well, I think most of them have been under some bit of pressure in recent times, and they've not really shown much of an inclination to get out of it, except perhaps, one of the stocks which does indicate some signs of strength would be MRF, where a small triangle type price pattern had formed and an upside breakout ensued from it. And then since then the prices have been looking up. Today's market trading is showing some, some small bit of buying emerging into Balkrishna, but the action there is, I would think, still fairly tentative. And when it comes to CEAT, I think that, and along with Apollo Tyres, these two stocks continue to remain under pressure. So it would seem like it's a pretty mixed bag. And the only one with a clear buy signal at the moment would be MRF.
All right, would like to just flag out some of the auto stocks that are really in top gear right now. Pull up a Hero Motocorp, 6% there. You have Bajaj Auto, which is doing quite well. Something like M&M's just about flattish right now. But Sunil, let's get in a take as to how you're looking at the auto space as a whole. How you read into the mixed bag of auto sales numbers that have come in? What are you expecting going forward?
We remain bullish and overweight on the auto sector, both in the auto as well as the auto ancillaries. And the recent numbers, one of the things which you have to bear in mind that the festival season got a bit distorted. So when you're comparing, YOY, the numbers are not really comparable. So I think that if you wait for this quarter, you will see that the specific sectors there are doing quite well, and ancillaries in fact have an export leg to them, which is quite bullish. So we've been consistently overweight on auto and auto ancillaries a year or so, and we continue to retain that stance because we believe that ultimately, the capital goods, the cycle will be driven by the increasing auto utilization, and ultimately, from a perspective of the per capita GDP of India, where it's going from the current 2,200 to say 5,000 in the next 3 years, autos will be a big component of that drive. So we remain bullish on automobiles overall as a sector.
Sunil, what's the take on pharma? Today we had a little bit of news. The US FDA is going to start inspection of Cipla's Kurkum site. They've also started inspection of Sun Pharma's Halol facility. What's the take that you're getting when it comes to farmers with that bet of the fact that you're battling with the expensive valuations and some of these FDA surprises?
Well, for the last 1.5 years, we've been consistently underweight pharma at our fund house. And I've been repeatedly talking on this channel and elsewhere that we think that this whole rally driven by the rupee depreciation does not reflect the fundamental strength of the pharma sector, especially export-oriented pharma sector. We've been very bearish on them. Where we are slightly more bullish overall in the pharma space is in healthcare, hospitals, and in domestic pharma to some extent. So we will continue to remain underweight, and that was a very contra call. But I think over the coming 6 to 12 months, we will see a rally. And we will see a rally in the pharma sector. So we remain bullish on pharma.
All right,
weeks and years, in addition to what you mentioned in terms of the risks of FDA inspection and the quality, we also see the rupee as being more stable, and hence any rally which came up on the back of a constantly depreciating rupee, I think there will be a rollback there. So we continue to retain our underweight stance on the pharma sector.
Continue to remain underweight when it comes to pharma. What about the oil marketing companies? What's your take here, Sunil?
See, we believe that the recent trend, we've got a kind of underweight position only because we felt that the government in an election year would not want to pass on the entire increase to the consumer, and so hence the oil marketing companies might have to absorb something in their P&L account on account of being an election year, and so we retain an underweight stance. However, most recently the easing of prices at the oil front has obviously led to some kind of a pullback on those stocks, but we'd like to adopt a wait and watch approach because there's still 6 months to the general election, and we continue to retain a view that government can't allow inflation because in an election year inflation is very critical, and oil as a footprint of CPI is something that we need to take notice of. So I think we would still be cautious on that front. Post the elections, we will take a call on this particular sector.
Okay. Fair enough, Sunil. Okay, I just want to very quickly go across to our technical guests. 5 minutes before close, Kunal, what is it that you're spotting on the charts?
Well, there are two stocks which I would want to highlight. One of them is IRB Infra. Now, after quite some time, we are talking of this stock. It's given a breakout on the daily frame, and I believe the stock should now restart a new uptrend. The volumes have been pretty stable for IRB Infra. 155 is a target which I'm suggesting a buy with, stop loss 140, and even BEL, Bharat Electronics, trading at closer to 95 levels. Even that stock has given a breakout of 50 DMA. That's a buy, 102 as an immediate target, and stop loss at 92.
Manas?
PL, because stock has given a breakout on the intraday chart above 94 rupees, and I think after this move stock can even test its 100-day moving average. So target would be around 102, stop loss should be 93 rupees. ITC is a buy because most of the FMCG stocks are doing well, and ITC has given a fresh breakout above 100-day moving average today. So take a long position here with stop loss of 180, target would be 295.
All right, that's the take coming in, and just about 4.5 minutes to go as we wrap down today's trading session. On the backdrop of falling oil prices, by and large stable macros, it's been a day when the markets haven't really obliged, so to speak, with the bulls really not doing cartwheels at all, even far from that, although we're trying to claw back into the green. It's a 1% gain on the index. Why do you think, Sunil, that is, that we're not seeing the markets entirely convinced, despite the fact that some of the key pillars that we were so eagerly anticipating are working in our favor?
The 11th of December, I think that ultimately is weighing on the market. See, the market is very sensitive to continuity in governance. And I think this election, because the incumbent election for BJP in 3 states, I think is very critical for the market to get a feel for whether the NDA led by Mr. Modi is going to come back to power. So I think that they would like to see what the voters, whether BJP's governance track record in, let's say, Madhya Pradesh has been fairly good, Chhattisgarh has been good, Rajasthan has been a little iffy, but I think that people, the market traders, would definitely want to know which way the voter is thinking and then build their positions. So I think till the 11th of December, there's going to be lots of these opinion polls and exit polls and all kinds of stuff floating around, creating volatility. So I would say that the reason the market is not really jumping up at macros today is that there's a more near-term worry in their minds, which is dominating their thought process, and they don't want to accumulate, high-value stocks, high-valuation stocks at this point and be left with egg on their face in case December 11th comes up with any kind of a nasty surprise. So I think it's a prudent thing where the market, where people are cautious about trades.
Okay, Sunil, we let you go at that. Thanks very much for taking out the time, and all the best with the new fund offer. Close out trade. Karunya, my colleague, joins in with the highlights of today.